right, welcome back to Dad's Deals and Dumbbells, the podcast where dad life meets business hustle and Jim grunts.
We're two entrepreneurial dads, one lawyer, one chiropractor, navigating fatherhood, fitness, growing our business without losing our gains or our minds.
Today we're chopping it up with a guy who's all about discipline and drive, a mortgage pro turned author, friend of mine as well, probably the best accreditation you have right there.
Absolutely.
And a dad who's figured out how to build, balance, and boss it up, Mr. Otis Gatlin.
He's going to tell us how he juggles underwriting, mindset coaching, and writing a damn book. Let's dive into it.
Yes.
So before we bring Otis in, Mitch, I got a question for you. Have you ever tried to explain to your kids, and I've seen the videos, and I know that they're in your office, but do they understand what it is that you actually do?
No, they always tell people, don't step on the cracks, or my mom will have to fix your back. That's their favorite little story.
Well,
Superstition as well.
I mean,
it's kind of true.
it's not bad.
No,
You
but
know?
at least they get a basic understanding of it.
I could see maybe some kind of a jingle for your office with your kids singing and doing something like that. Definitely some new some video for you there. My daughter once explained that I argue for money, which is kind of accurate.
That's very true.
You know. So let's bring in a guy whose kid probably thinks he's a banker or maybe a wizard.
A little bit of that, yeah.
Welcome to the show, Mr. Otis Gatlin.
Thank you, sir. Appreciate it.
So we want to introduce Otis. He's a government-certified underwriter, has worked in mortgage banking for over 20 years, helping thousands of families achieve their dreams of home ownership. He has a passion for affordable housing and economic justice. He wrote a new book, The Mortgage Manual. It's designed to educate consumers and professionals on how to achieve the American dream
Got to display the book.
of home ownership and providing policy ideas to fix America's housing shortage.
Yes,
Definitely a big topic.
absolutely.
Otis, before we jump into the substance of our time with you, we like to ask our dads that come to visit for a dad hack. Do you have a dad hack that makes life a little bit easier for you and the family?
Yeah, I do. What I try to do, because we're dads and we're always thinking about the next step, the next, college and schools and grades and how to provide for our families. What I try to do, if it doesn't work every day, I try to make my kids laugh every day. Because there's a lot of things in life to be serious about, grades and things like that. And I just try to make sure that I'm also your dad and I want you to be the best, but I also want to let you know that I'm not a drill sergeant and I'm here to be your biggest supporter and your biggest cheerleader. And so what I try to do is make them laugh every day in a silly way. Sometimes it works. The term dad jokes is now more relevant now that they're a little older. So, but that's kind of my little dad hack because it's a lot of serious things to address with your kids as they get older and they get younger because we're kind of looked at, the disciplinary person in the household sometime. And so try to make them laugh and be funny, but also know when you're being serious as well because they look at our serious side so much.
Sure.
And they need to see our fun side as well. So that's a little bit of a dad hack for me.
Sure. Now, how old are your kids?
15 and 11.
2 girls.
2 girls, yes. Didn't get the boy out. But, hey, my wife said, I'm not doing another one because I don't want to risk having 3 girls. So I said, all right, we're done. So
I'd say that's going to be a pretty big risk. So yeah. I got lucky on them 3.
Yeah, so 15 and 11. So you've got one that has her permit or is getting her permit soon?
We ain't there yet.
What do you mean you ain't there yet?
She's finishing up as a freshman, and so she'll be a sophomore next year. So we'll
Driver's ed this summer.
Yes, and then the line to get into driver's ed is like a lot of waiting. So we're not even there yet. So she don't want to drive. She enjoys it right now. So she's not asking. I'm not pushing.
I'm gonna tell you because I've got a 16-year-old and an 11-year-old. Once the 16-year-old had a license and she had transportation, that made life for Mom and I a little bit easier because she's shuffling around our son sometimes.
Okay.
So put that.
Going to the wrong school too.
Well, I only did that once. Went to pick my daughter up at the wrong school once.
Oh, no, don't do that.
Yeah, well, it happens. So now, do you have any quality dad jokes you want to pass along?
No, I just try to be, silly or make impressions about stuff like that. Or like they watch a lot of stuff on streaming television, and I'll make fun of like Mr. Beast or somebody else. Like, why are you watching this guy?
Gotcha.
But it's cartoons for them like it was for us.
Who's more serious, you or your wife?
Definitely me.
Are you more scary too? I asked my children this the other day.
I'm more scary because I've always been more of a serious person. Everybody who knows me since I was younger. But yeah, I'm more serious. My wife is more loosey-goosey. She liked to have fun with the kids and joke and stuff like that. I'm more of the, serious person. Now, I'm more witty. Like, my wife is animated. I'm not animated like that, but I'm more witty. So I'm trying to be typically more serious. I'm not, I take things too serious sometimes. Like, if they all loud and stuff and I'm working, hey,
Shut up.
yell upstairs, hey, stuff like that. But she's more, hey, I'm home, guy, stuff like that. So me more serious.
Gotcha. So why don't you walk us through your career? Tell us how you got started and what you're doing now, and fill listeners in.
So right now I work for a home builder. It'll be 4 years tomorrow, ironically. And what I do is I'm a mortgage underwriter. So what that means is I actually look to approve or deny people who try to get mortgages for who are our customers. The way I got started was I started in 98, and I was working for HFC at the time, which is a subprime lender that's no longer in business. So I was doing...
And so people understand, what is a subprime lender?
Subprime lender is a lender that was a high-risk lender lending money credit to borrowers who had sketchy credit.
These are some of the people that kind of got us into deep shit back in 2009?
Yes, absolutely.
It's Latin. I don't know if you knew that.
So I was doing retail credit, which is people who get credit cards at like Best Buy, furniture spots, stuff like that. And that's how I met my wife, ironically. And so I was at the company, and mortgages were still big. And so I transitioned to the mortgage department there. Went there. We were doing mortgages, refinances. We were charging like 10%. 9 origination points, and people were doing it. And I'm like, wow, this is crazy.
And so people know what an interest rate is, of course. What's an origination point?
Origination point is a fee the lender charges the borrower, usually 1% of the loan amount. So if you got a $250,000 loan, 1 point is $2,500.
And that's generally paid up front.
Yes. We were charging at the time like 8 to 10.
So for a person who takes out a mortgage, it's a 30-year mortgage. Most mortgages, of course, don't go 30 years, but let's say that it goes 10 years.
Right.
You're paying those points up front in full for the privilege of having the loan at that rate.
Yes, and that money goes directly to the lender's pocket. And so I ended up being there, got a good understanding, then went to a wholesale lender, which is a wholesale lender is a lender who works with mortgage brokers. A mortgage broker is a person, you go shop him, he shops your mortgage to lender A, lender B, lender C. He works with maybe 5 different lenders. He'll give you a better interest rate. So it was a wholesale side. Went there, had a great time. It was a new company. I mean, making tons of money there. The company was making tons of money. This is 2002 to 2007, and housing is just bonkers. 2006, 2005, I get my house. And I kind of knew that where the industry was going, because I started seeing the sketchiness of a lot of the loans we were doing, and we had a lot of delinquencies happening. So I got my house in 2005 knowing that, hey, let me get it now because I don't know how the industry is going to be in a couple of years. 2007, company goes belly up. Get out of the mortgage business, become a mortgage counselor for a nonprofit.
What does that mean?
So I was working at a nonprofit organization, and they were doing mortgages for people with sketchy credit again. And so what they were doing is they were helping people with foreclosure, helping people who wanted to get a mortgage through a partner bank. And so what the process was to help them through counseling, budgeting, education, and getting them to get approved for a mortgage. And so these were people who didn't have traditional credit, who have good credit or bad credit. And so I was doing that, helping people buy houses. Now, this is at the bottom of the housing market. And I'm also helping people who were subprime borrowers at that time avoid foreclosure. And so foreclosures are happening like crazy around this time. So I began to be a mortgage counselor then, just to get a job, because the industry had no openings. Worked there for about 6 months because it was night and day, 6 days a week. It was one of the best jobs I had in my career as a mortgage counselor, because you see people's realistic situation face to face, and I really enjoyed it. And then
You say realistic situation. You're talking about the good, the bad, and the ugly.
Good, bad, and ugly. They got a good situation. They buying a house. They got good credit. They got money. They got a good job. And then someone's coming in there saying, hey, I'm 120 days behind on my mortgage, or I'm about to go to a sheriff's sale in 2 weeks. Can you help me? I live in Ohio. Situations like that, like real situations, like help immediately. And it was from the biggest spectrum. So, or they needed a modification because they got behind or they can't afford it. They don't know. They don't know how they got in this situation. They lost their job because the economy's not good at the time, and they just looking for help. And so you're just there to kind of be a resource. Okay, go here, go here, go here, or help them. Or then you just had people who were just deadbeats. You just had just not paying. You just had those too. So you had to kind of tell them like, hey, you got a good job, you got some money, why are you not paying? Well, and that's a story I'll tell you about. So yeah, you just had all type of situations. So you learned a lot about how the real world works in the finance, when it comes to finances. And so I did that, went around, then ended up working at PNC Bank, which is a good bank, and 2009 got my FHA certification, and I was laid off again in 2014. That was hard. Then work for a mortgage servicer dealing with people in foreclosure again.
Mortgage servicer is what?
A mortgage servicer is the people who you make your mortgage payment to. So when around the 2008, you had a lot of foreclosures, you had a lot of people behind on their mortgages. So what happens is hedge funds, insurance companies, banks buy these mortgages at pennies on a dollar. And so when they buy these mortgages at pennies on a dollar, they want to get those called reperforming, because when you have a mortgage, when a mortgage goes 30 days late, it is automatically an underperforming asset. So never go 30 days late on your mortgage ever, because it now becomes an underperforming asset. So you had all these mortgages out here that were toxic. And so hedge funds and private equity were buying them, pennies on a dollar. Well, who's going to service them? Who's going to collect payments? Who's going to talk to the borrowers? And the company I worked for was working on behalf of these hedge funds, insurance companies, and things like that. And they needed people to work these mortgages that were, behind and things like that. And my job at the time, and this is like 2015, 2014, was to get people who were in foreclosure or who were 80, 90 days behind, help them with the short sale, help them with modification, help them with the deed in lieu. And so I learned about the foreclosure process again, because people need to understand, no lender wants to take you into foreclosure, because the only people who get rich in foreclosure is people like Joe, the lawyers.
No, that's just harsh. Just harsh.
That's the only people who get rich in foreclosure. Them the only people who win. The banks lose. The borrowers lose.
It is true that in that process, the lawyer gets made whole. They get paid for the time they put in.
Absolutely.
Yeah, and the challenge, of course, because my other side hustle is on the board of directors for a community bank, and the reality is the banks don't ever want to go into loans go into foreclosure, because then they're having to write off some of the debt, which then impacts their financials and for their stockholders. So it's a big mess.
Yes, it's a big mess, and then they have to get more liquidity, because the FDIC or the whatever regulatory body is governing the bank has to make sure that your assets are not toxic. And so went there and then worked a couple other places, and then went to Chase, got laid off from Chase. I was there from Chase from 2018 to 2017 to 2019. Worked for a payday lender, which was another eye-opening job to work for in 2019. And then
you see really desperate people there.
Oh man, you see some people who are lawyers, doctors, teachers getting payday loans. So I went there in 2019, and then March of 2020, COVID happens, and mortgages and real estate are just going bananas, and lenders and companies are reaching back out to me to hire me again. And so I've been working in mortgages consistently since. We've had some consolidation with some layoffs. Thankfully, I'm still employed, but during the 2020 to 2022, it was just, real estate was just gone bonkers. And so you had low interest rates, low prices, and so people were overbidding for houses, and lenders needed to get borrowers into the houses because they needed to compete. Borrowers needed to get a house, lenders needed to get financing for their borrowers. So it ended up here at my current company, which was a new home builder, which was kind of a good thing to happen, because they build houses all across the country. So I see how different real estate markets are developing, and I've been there since, pretty happy. And so that's kind of how it led me to writing a book and working where I'm at today.
Awesome.
any of that stuff. I don't know any of that stuff works at all. That's crazy. So what's a big mistake people do when applying for mortgages?
The biggest mistake, oh man, like most Americans, the biggest part and the hardest part of getting a mortgage is the down payment, because a lot of Americans don't save like they need to save money. Saving money is the most boringest disciplined thing you can ever do. To get a mortgage, the typical down payment that you need is usually 3.5% if you get an FHA, 5% if you get a conventional. But it takes the average first-time home buyer 1 to 3 years to save for a down payment. That's the average time. So
And those aren't big down payments.
no,
Decades ago, you're talking like 20% down.
Right.
If you're talking commercial,
oh my
what I
God,
do,
yes.
then you're talking 20-25%. that
Absolutely.
banks generally want to see.
So it takes the average home buyer 1 to 3 years to get for a down payment on the house. And if you're not, getting a gift or a down payment help from your parents or your sister or your cousin or your grandfather or your rich uncle, it's going to take 1 to 3 years to get that down payment.
What is the average size of a down payment?
Average down payment in America, which I do put in the book, is 12%.
So really? But like numbers, what's the actual numbers? Like average home sale is what, like $300K?
Oh, the average home sale now, or the average home sale right now in America is over $500,000.
That's average.
Yes, sir.
The average
That's
sale
according
is
to
$500,000?
That's according to the Federal Reserve.
So then 5% of that's what?
5% of that, 10% is 50,000. Half of that is 25,000. So that's why we have a housing crisis right now. So that's the average sale price, over $500,000. So,
And I think you're more in tune with this than I am, but for the younger generations, especially those folks that are in their 20s or maybe their early 30s as well, who are renters and they're paying sky high rents, one of the barriers that they continue to face in getting into buying a house is both a combination of price, because there's just
Yes.
limited inventory,
yes.
having to come up with that down payment.
Yes. And so that's the biggest mistake people make. You can get your credit good, right? Pay your bills on time, make the minimum payment, don't open up a lot of debt. Okay, get a good job. You have to
Low utilization rates.
keep manage your debt good. Okay, no problem. Get a livable wage, make a good 70, 75,000 a year after working for about 3-4 years. Most people can do that. Make a good, keep a job for a certain amount of time. Okay. No problem. So you make the money. You got good credit. You get credit cards. You can get a car note. Okay, you go buy a house. Now you got to come up with 3.5%, 5% down. Okay, so where's that money coming from? Your 401k? Okay, or is it coming from your liquid savings, the money that you put aside? Mind you, like you said, Joe, people are paying astronomical money in rent. So how are you able to save for a down payment if you're actually paying so much in rent? When I left my house in 2005, me and my wife was paying $750 a month in rent for a 2-bedroom.
Yeah. And we had this conversation on one of the last episodes about the fact that I had, my wife and I went and picked up a friend of ours who was staying with one of her friends.
Yeah.
And in an apartment, nice apartment, Naperville. It had its own private garage and probably 2 or 3 bedrooms.
Yeah.
Somehow the conversation of what rent was came up, and she's over $3,000 a month.
Yes. Crazy.
Higher than our mortgage.
Yeah, higher than my mortgage. So because you have a situation where rent is so high because we have a housing shortage and prices have gone up because we have a housing shortage, now people can't get down payments. And then with inflation being the way it is, people were like, well, I got to buy groceries. I got to buy eggs. I got to do this. I got to do
Food on
that.
the table.
Yeah, I got to put food on the table. How I'm going to sell, put money for a down payment. So the hardest thing is down payment. And if you look at any mortgage company, bank, the biggest issue in fraud is actually down payment. People lie about how much money they have. They get someone who they get funds that they shouldn't get it from. Let's say they borrow money and you shouldn't borrow money for a down payment, or they have money stashed in a mattress somewhere, cash in a shoebox, and they put the money in there and it's unsourced. So those are the biggest barriers. I mean, you're going to run into that. Those are usually the biggest issues. And banks typically are very, very careful with that, because that's where the issues with most people when they try to get a house they can afford. They lie about how much they make, and they lie about how to get the money for the down payment.
Well, and correct me if I'm wrong, but the underwriter's job is to go through and to check those things.
Yes. We have to, as a job, as an underwriter, you're a referee. You hold the lender's money. You make a mistake, that's maybe a 30-year mistake on the lender's books. So remember, people understand every loan is a risk, right? Every loan is a risk. There's no perfect loan. You can have a borrower I've had borrowers who I did everything right, and the situation comes back. There was a fraud situation, or they work for family that you didn't know it. And now you can disguise pay stubs and W-2s online. So you may have a person who may be self-employed. They don't want to let you know they're self-employed. They may say they work for someone. So yeah, our job is to make sure that we're protecting the bank's money.
So let's dive into a couple of those specific issues, because I know that these sometimes can be problems.
Yeah.
You just talked about self-employed.
Yeah.
Is self-employed a red flag for underwriting?
So what the hell? I'm so no.
Self-employed is not bad. It's a little bit more paper. It's a risk. It's a little bit more paperwork.
It's a lot more paperwork sometimes.
Yeah, it is. The problem I have with self-employed is like anybody problem. They want to make less on taxes than what they actually make in real life. So that's the problem they have.
It's funny you say that,
Yes.
because I'm going to be doing a seminar in a couple weeks for business owners about planning and when you want to sell.
Yes.
It's the exact same problem, whether you want to borrow money or you want to sell. Business owners tend to want to expense out everything and show them no profit or very little profit, so they're not paying a lot in taxes.
Correct.
And so they play this game.
But then you can't sell for what you're worth.
You can't sell your business at a
Comes back to
premium.
bite you.
Right. You can't sell your business at a premium. You can't buy a house at a premium. I mean, I've had situations where the self-employed borrower gives me tax returns and they make $90,000, $100,000, blah, blah, blah. I'm like, okay, now we order transcripts. So what are transcripts? Transcripts are what we go to the IRS and say, what did you file? What did you file? Now, when I get those transcripts, that $90,000 better match. There's been times I've looked at that transcript and it say $30,000. So they telling the government they make $30,000, but they telling the lender they make $90,000. We have an issue here. You lose somebody.
There's fraud somewhere.
Somebody lying somewhere. Someone's lying, and so we try to, at least try to work with the borrower sometime and say, look, you got to go refile. Now we don't have to. You got to go refile, and we need to. And I've said you had to go downtown, refile, and get it stamped by the IRS. You do a 1040X, and so that's
to correct their prior.
That's to
filing,
correct
to
their
show the correct numbers, so that you then can do the underwriting piece and say these things match.
Yes,
Then they're probably going to have to owe, right?
That's correct.
That's the other piece.
Which they don't want to do. So that's the issue you run into. And sometimes, they may owe, and then you got to pay it off. If they owe like, $8,000, $9,000, and when they're filing, they haven't paid it off yet. You got to get them pay off $8,000, $9,000 to IRS as a qualifier to buy the house. Well, you don't want to do that. You want to, put on a payment plan. Something like that.
Someone else, yeah.
Right. So those are really the issues we run in with self-employed, just filing the taxes correctly and making sure they make the money they make that they say they make. Yeah, That's the biggest issue. No one likes to pay taxes, so I get it.
So with the FHA directs and stuff like that, how does that change? Why does that change the 3 to 5% down?
So for FHA, you talking about for self-employed or just? So FHA is a program. You put 3.5% down is the lowest down payment you're going to have, unless you're a veteran. A veteran, you can put no money down. So,
is there qualifiers on that as well?
You just got to be a veteran, in good standing.
And how the level of disability.
You can be disabled. You should be able to afford the house.
I wasn't sure if I know there's disabled benefits. I don't know if you were fully able.
Yeah.
Handicapable or something.
Yes.
And then there's still a benefit for them.
Yes, absolutely. They can get a mortgage just like anybody else. They can be disabled. Actually, if they're disabled, it's a little bit easier because But the VA program is a great program, 100% financing, no down payment for veterans. That's a good program, but obviously everybody's not a veteran. So the next government program is FHA, which is the most popular, which is you put 3.5% down. It was created in 1938 during the Great Depression. So the reason the FHA program exists is because we had a housing problem in 1938. And so there was no regulation around mortgages back then. So under the Roosevelt administration, they created the Federal Housing Administration to get buyers to buy a house. And so it's a 3.5% down. It's been a great program. It's never taken taxpayer money, ever. So that's one of the benefits of FHA. I've never had an FHA. I know people who have FHA.
Yeah, so to kind of expand on this a little bit, the FHA program is a guarantee for the actual lender.
Yes.
Right?
So what the government says, it says, look, this borrower is going to put 3.5% down. The federal government is going to ensure because all the FHA is an insurance policy to the bank.
Right.
ABC Bank says, hey, we're not going to do that. We need to put 20% down. The FHA says, okay, we'll give you insurance. The borrower's going to pay insurance, and we're going to give them 3.5% down. If they default, you file an insurance claim with the federal government, and we will pay you.
So it is a program that makes it more enticing for lenders
Yes.
to fund a loan because they know that they're going to have that a bit of money that normally would go for down payment is going to be guaranteed to pay back the loan.
Absolutely.
Is that insurance that goes until you get the 20%?
So
That's probably PMI.
that's PMI. That's more of a PMI is the same. It works the same, but it's more that's privatized. So that insurance that you pay as PMI through the conventional, that goes to a private insurance company,
Got it.
not the government, not HUD. So that's the same model, but it just goes to private insurance versus government insurance.
So if you're, let's just say you're ABC Bank, and
Yeah.
ABC Bank is interested in lending to you as a customer, you don't have 20% down, which is what they normally require for a loan. But if you go through FHA, then FHA can provide a guarantee for that extra part that you don't have that is a down payment.
Mm-hmm.
So you have something to qualify for FHA. And
Yeah.
then you've got the FHA guarantee for the bank, so it makes it more enticing for the bank because they have less to lose.
Yes, and it's a great program.
But in order to do it, there's all sorts of things that you have to do. You got to
Yes.
make sure that it's going to be a sound investment for the government, for the bank. There's extra hurdles.
First-time home buyers, right? Is there income?
No, it's no income restrictions on FHA. You only can get one, and it has to be your primary residence. So it's only for primary residents. You have to stay in it for at least a year. There are situations or exceptions where you can have two FHAs, but the houses have to be 100 miles apart. So you can get a second one, but it has to be 100 miles apart. And it has to be some circumstances that will allow. But for the most part, it's only for primary, buy a house, pay it off and stuff like that. And so it's a good entryway to the home ownership. And so it's a really good program for challenged credit borrowers.
And ideally, once you've acquired that first house, you've got a down payment in it. Ideally, when you sell, you don't lose money. You at least pull out the money that you put in.
Right.
And then you can buy another house. And then you're more credit worthy because you've got some money to put down. Hopefully, you've got a decent credit record.
Right.
And it's going to be more enticing for lenders at that point.
Absolutely. First home buyers, 70% of them use their savings on that first house. Second house, they use the equity.
Mm-hmm.
So that first is the biggest hurdle, just getting into the game.
Yep.
Once you get that savings, get that down payment, now you've acquired equity. You sell the first house, you make $50,000, $100,000, use that down payment on the next house, and you just repeat the same thing. Yeah, and so, but the first one is always the hardest, getting into the game. So yeah, FHA provides that opportunity, which is good.
Yeah.
Has it always been that 3.5%?
Yes.
1930, whatever?
Yes, it's been 3.5%, and they allow a little bit more higher payment than typically because we have different markets. And so, yeah, but it's been 3.5% forever, as long as it's been created. And it's been a good program. During the 2008, it got really tough. But now it used to be you pay the insurance for 5 years, Joe. Now you pay it for 30 years. So now they make you pay.
When you
for
say
30.
the insurance, you're talking about PMI.
The government insurance.
The government insurance. Okay.
The government insurance through FHA used to be for 5 years.
So you
now
do an
pay for 30.
FHA loan now, you're paying that insurance the whole time you
Yes,
get the
sir.
mortgage?
Yes.
And how is that insurance amount determined?
So it's a set guideline. So typically, if you pay 1.75% of the loan amount up front, and then you pay 0.55% of the monthly payment of every month until you pay it off. So, and
then ideally you get far enough in and then you refinance the loan?
Yes, that's the idea.
So then we do that. You get off the insurance.
Yes, most people obviously don't keep a mortgage for 30 years, but typically what happens is they will keep it for a certain amount of time, get enough equity, so then they have like 20% in equity in their home, and then they'll refinance to a smaller, cheaper rate, no insurance, no PMI, no FHA, none of that. So that's typically what happens with most borrowers. But if you never pay it, if you never refinance, you're going to be paying for 30 years. So yeah, you can refinance. It's options available. Right now, refinances are pretty much DOA because rates are so high. And so everybody with the 2.5% to 3.5% interest rates,
Want to keep that low?
they want to keep that low.
I used to get those calls like, "Oh, could you get this?" Like, what's your interest rate right now? 3.5. Like, don't even bother.
Right.
I don't move any farther past this conversation.
Right. So yeah, if you got some rate during 2020 to 2022, 2023 maybe, yeah, you're not getting any, those borrowers are not moving. And that's kind of the reason we have a housing shortage too. Because no one's
no
moving.
one wants to switch.
No one wants to go from 2.5, 3 to 5 to
It's
7.
a bad financial move.
Right.
I'm gonna check the camera. Keep going.
Yeah. So it's it's kind of an interesting time right now because current homeowners can't tap into the equity that they want to cash out. So I've been telling people, look, if you can't sell and get your equity, just take out a HELOC if you want to access it to get some capital. Obviously, it's a loan, but if you want to access some capital with your HELOC with the appreciation, take out a HELOC. And that's kind of what I've been telling people to do. Because if you sell, you're going to be paying 2.5%, 3%. You're going to be paying 5.5% to 6.5%. That's just the bottom line. So I've been telling people if they're going to do that, just get new construction because typically you can get a better deal on financing with that.
A good option then to take a HELOC out of your current home, use it as a down payment on a new construction.
You can do that. That is one. That is one. Yeah, there's one exception. Yes, that is one exception. You can use funds from your HELOC. Those are the only borrow funds that the government will allow. You can take funds from your HELOC. If you got $100,000 HELOC, you can take $50,000 and use that for a down payment on a new house. Now you're gonna have to be able to afford those payments, the $50,000 and the new payment. But yeah, you can use that for a down payment. I see it all the time. And people are using that. So yeah, that's definitely an option for people.
Wheels are spinning.
Well, it's funny you say that. We had an opportunity for an investment a few months ago, and I didn't want to liquidate other investments we had. So I talked to one of the bankers that we work with, and he suggested we do a HELOC.
Yeah.
I frankly just hadn't considered it, but it's something where we need the cash about a year, and I'll be able to pay it all off.
Absolutely.
And so we did it. It was pretty seamless and worked out pretty well.
Yeah, it's a good lifeline to have. If you need something, do it. I tell people if you got the equity, don't touch it. Don't go to the Maldives.
Oh, no.
Don't take a cruise.
I always look at those things as, the equity you have in your house is an investment.
Yes.
Right? Your mortgage payment is a liability.
Yes.
You can think of it however you want, but the reality is you're living in the house. And so, but if you're going to pull out that equity and you're going to do something with it, you're going to do something useful with it.
Yes. Yeah. Yes.
Now it's going to make you more money.
Right.
100%.
Don't take a cruise or, with the HELOC and stuff like that. If you're going to do some renovations, okay, but pay it off.
Something that'll get you
some value back, right. So I always have to say that because we love to, Americans, we love our debt. So
We do.
We love to. Yeah, I'm but that monthly payment has to.
I'm all about the experience. The challenge is people figuring out how to live within their means and have those experiences. And
Yeah.
it's hell to try to keep up.
Cruise is a better experience than going to an all-inclusive.
I don't know. I've been on both cruises and I did all-inclusive. My wife gets motion sickness, so I prefer to stay at home. Oh, not stay at home, but all-inclusive and a resort. Yeah, stay in.
We're pricing out our cruise anniversary for January. Some cruises like quarter of the cost of all-inclusive for a week.
Yeah.
We're about to book one for the summer, and it's going to be.
It's gonna be up there.
It's gonna be something.
Yeah.
It's gonna be worth it, though. It'll be worth it.
I hope so.
So, all right. So, tell us a funny or weird story about something you've crossed, either in underwriting or.
Oh wait.
I got a good one. So the 08 one, I got a good one. I got a good story, and I got a bad story. So the one that's funny story from 08, I had a guy come in complaining, man, I can't make this mortgage payment, man. It's just tough. I'm going through some things, and man, so I said, okay, he's telling me he can't make a payment. So I get the credit report. I look at the credit report. I look at the screen. Mortgage payment's $800 a month. I'm like, you can't make this payment? Yeah, man, I'm struggling. I get, finance, blah, blah. So I said, okay, well, let's look at your income. What do you, let me get your pay stubs and your W-2s. I get his pay stubs. Now, this is 2007. Now, his mortgage payment's $800. I get his pay stub. His net take home every 2 weeks was $2,500.
Sounds like you can make the mortgage payment.
Now, I'm saying to him, wait a minute. You bring home $2,500 every 2 weeks and you make an $800 mortgage payment? Yeah, man, I just had the things go. I said, dude, do you know how many people come in my office who can't make payments, who don't make nearly the money? This is your take home.
Right.
This is not your gross. This is your take home. How you think I'm going to go to your lender and say he can't afford a mortgage payment when your take home is $2,500 per check and your mortgage is $800? You bring home 3 times the monthly payment. He says, well, I got a car payment. My wife needed a new car. Blah. I said, okay, let's look at the car. Car payment's $300. I said, look, you have a habit that I don't know about if you can't make this mortgage payment. Okay?
There's something else going on.
That's something else going on. Okay? Because if I look at this, you know how many people would. I said, do you know? And he worked at the airport. So I know you work in something that people gonna always use. I said, do you know how many people come to my office who would kill to make what you make?
Yeah.
Do you know?
Did you ever find out the answer? Where those
No, he
guys are
didn't.
going?
He didn't have an answer. I said, dude, what do you got? I said, what do you have going on?
Another lady,
that
maybe.
You can't make an $800 mortgage payment and your take home is $2,500, and you struggling?
Is his wife working too?
He said his wife wasn't working, but she didn't need to work. And I said,
You got was eating at like Morton Steakhouse?
no, I'm looking at the bank statement. It just, like most people, Chipotle and McDonald's and stuff like that. But you still have.
At 07, Chipotle was like $7.
Right. You still got money left
I
over.
remember.
Right.
I used to eat 2 burritos every time.
Exactly. So I'm looking at him like, you need to get out of my office because I can't help you. There's no way I can help you. And so he's like, you can't. I said, no. There's no way I'm going to be able to go to bat for you in any way, showing that you make this type of money and you're struggling to make an $800 mortgage payment. I said, do you know how many people come in my office who can't make mortgage payments and they don't make nearly the money you make?
So if you saw this bank statements, what was it all good with?
Just like you said, eating out, Walmart,
just bleeding
cash, just mismanaging money. And so many of us in America mismanage our money. If you've seen the bank statements that I look at every day and how many people spend money on Uber Eats, DoorDash, Uber, sports gambling, stuff like that, the amount of money that comes out of people's accounts, they don't have no idea how to manage their money. And so you got borrowers like that, and then you have borrowers who, just like anybody else, they manage their money, they don't spend a lot, and they don't make a lot of money. And some of them do make a lot of money, and they manage their funds, and they have a lot of money. Those are the borrowers you like to lend money to. The other one was a good story. We had an immigrant about a few years ago who was buying one of our houses, and they were from Haiti. They came over in 2010 after the earthquake, and they were working in a meat processing plant, and for 10 years. And they made $20 an hour after 10 years.
Oof.
Think about what I said. They made $20 an hour after working there for 10 years. They were living in Nebraska. Now, they're from Haiti now. They saved $37,000.
That's impressive.
And they weren't sending any money back.
No. And they had 2 credit cards.
With?
Like $100 balances, something basic.
They haven't paid every time.
And they bought their first house in Nebraska.
Wow.
You know what I'm saying?
Yeah.
Isn't that what people come to the country for? To be able to get access? That's the typical American dream, right?
Yeah.
You work your way up and you get into a situation and you save, you do right for 10 years, and you buy your first house.
Yeah.
Who doesn't want that?
That's amazing.
So those are stories you see, and when you look at some other people, it's like, what's your excuse? You gonna work in a meat processing plant for 10 years at making $20 an hour?
It makes you wonder, what's their, obviously that's a huge drive on the immigrant side.
Yeah.
And once you're here, what's the drive on that then?
Yeah.
The American dream is big for those immigrants, but once you're kind of a national citizen, what's their kids' drive?
Yeah, and that's
How do they have an experience going back to Haiti and going I don't want to do that shit at all?
right. And it's like they're making it a meat. They're not making tons of money. They're working in a meat processing plant trying to access the American 10-hour days trying to access the American dream.
Yeah.
And what's wrong with that? Isn't that what we want for everybody? And so a lot of times I tell people that story is I know people been trying to buy a house for 15, 20 years. Still ain't bought. They're not ready.
It's not for a lot. Yeah, it's not for lack of people telling them what to do.
Yeah. And like I said, they saved their money. They didn't make a lot of money. You going to work 10 years in a meat processing plant, $20 an hour after 10 years? What were they making when they first started? 7, 8? You know, so
Yeah.
I just tell people that story all the time as an inspiration. So those are two good stories.
That's awesome. That's awesome. Well, so now there's a whole other side to you, of course.
Yes.
And that's Otis Gatlin, the author.
Yes.
And so I ask you this next question with that in mind, as well as, all the other work that you've done.
Yeah.
Did your educational background prep you at all for either? For
No.
either your career or your book writing?
No. When I got in mortgages, it was just I was working in finance. I went to college. I went to junior college, one of the city's colleges of Chicago. I didn't want to take out any student loan debt, and so I went for 2 years. And then I ran out of money, and I said, okay, I got to work. I didn't want to take out any student loan debt, so worked a few places, and ended up getting a job at a HFC, and worked my way through there. And when I worked there, I got into mortgages. And then I saw a lot of people who didn't finish college in mortgages. And I found this was a way to have a good life. You didn't have to have a college degree. I was like, okay, I need to, make myself valuable to other lenders. And so it's a good business to be in. It's a feast or famine business. I've been laid off 3 times. And so when there's an economic upturn or downturn, something changes, and so I get affected, and so it's a good business to be in. I've had experiences where people who got laid off get back in, and some of them don't go back. There's just a reality, because it's like I can't deal with the older I get, the more I can't deal with the lack of stability.
Yeah. Now, so I got a question for you, because people who don't know anything about the mortgage industry may not be aware how the compensation kind of works.
Yeah.
Because there's a salary.
Yeah.
But then there's also some additional compensation sometimes?
You get salary, you get bonus, you work a lot of hours, overtime. So you get salary, bonus, overtime, all the perks that you would think you would want, that you would get. You're solving problems, you're helping people. I've had situations, the moving van is in the lot. They're driving from Virginia to come to the closing. How can we get this thing done in 3 days? If a person's relocating from one state to another and they decide to buy a house in another state, you got to get that loan closed. And so you're solving a lot of problems. You're just dealing with situations from every financial background. I mean, I think that's the thing I see, the people with high net worth money, millions of dollars buying a mortgage. They can afford to buy the house cash, but they don't want to pay cash for a house. So they just say, hey, I'll keep my $3 million and I'll take out a $200,000 mortgage. I'll put, you see people who barely, like that's the story I gave, scrapping money together. And then you just see your average middle class person buying a house.
Yeah.
So it's every financial situation is different, and you see every situation from different backgrounds.
At this point in your career, are you able to get a read on someone if they come into you, or is it completely like out of left field every single time?
It's usually because I don't deal with borrowers face to face like I used to. I'm underwriting their credit profile, and so I can look at their history and see, okay, you had a foreclosure in 2012, right? Let me look at your bank statement, because the bank statements tell you everything. What are they spending money on?
You're the guy behind the screen who's looking at all the documents.
Yes, I'm looking at all the documents. I'm looking at how much money you saved, how much money you got put away, how much you spending on streaming, food. If you had a bankruptcy, what have you done since then? Was it because of a medical issue? Are you spending way more money than your pay stub shows? Am I seeing NSFs in your account? Am I seeing you going to restaurants 3 and 4 times a week and not grocery shopping, stuff like that? You look and say, okay, they filed bankruptcy or they had some delinquencies. What transpired between this and that? Everybody goes through things. What did you learn from that? And so, if you had a situation or they got divorced and they had to move, from the ex-spouse's house, and they got to, have some, live with a family member or something like that. What happened? What circumstances happened? What did you do during that time? And what did you do? What are you doing now to correct it or fix it? And so you get a right idea of, who was serious and who was really just kind of did the bankruptcy or delinquency because they just didn't want to be responsible. You see all that, and you take those factors into consideration. So, but you get a good read on, how people handle their money a whole lot.
So let's jump into the book. How did you get to the point where you said to yourself, I need to write a book?
My wife has been telling me for years, because people always call me or email me or text me about mortgage stuff. Hey, I'm thinking about refinancing. What are rates right now? Everybody want to know what rates are, right? And
Yeah,
so,
look online.
you know, what are you seeing? What type of
Bankrate.com.
rates are you seeing? What are people overpaying? You know, people want to know what the vibe is in the mortgage business. So,
Get the pulse.
yeah. And so I would get these calls, text, emails, be on the phone with people. My wife used to say, you need people to pay you for your time. I'm like, well, you know, I mean, I like to help people. You know, you need to get people to pay you for what you know. So around, I had got an idea for this book, and I said, you know, I don't want to know about people want to read a book about this. And so a guy I grew up with is a publisher, and he just put a Facebook post out saying, if you want to write a book, DM me. I DM him, talk to him on the phone, and I told him, I said, look, I'm thinking about writing a book about, you know, how to educate borrowers how to buy a house. You know, because one thing that inspired me, because African Americans are still not represented in home ownership. If you never knew this, African Americans have never reached 50% home ownership in the United States. The highest home ownership rate for African Americans has been 2004 was 49.4%.
And that's like half of every house.
Yes.
However,
That was the most we ever reached. After the crash, we were around 41, 42. Now we're about
that's a big
44,
drop.
45. So a lot of black wealth was lost during the recession of 2008. And so I've always known this, that as a person who is a black homeowner, that I know what I know because I'm in the business. And so my wife used to say, hey, you get people to pay. So I talked to him about it, the publisher, and he said, man, this is very much needed. I said, you really think so? He said, yeah, we need this because I need so many people who rent, who are, you know, look like us. They don't, you know, think about buying a house. You know, we need to educate.
Too far, though.
Right. They think it's too far. They don't have any idea, blah, blah, blah. He said, we need to educate, you know, everybody. But he said, particularly, we need to have a manual, you know, for a roadmap for people to buy a house. And so he had someone like ghostwrite it, like the introduction. And he said, we'll get an editor to work with you. And she wrote the first introduction, and it wasn't my voice. And I said, you know, I got to write this. And so I started August, September of 2023. And I said, okay, I'm going to do this. I work a job full time, got 2 kids, a wife, responsibilities, blah, blah, blah. How in the heck am I going to do this? And so I started with like the introduction, had the chapters online, and I just started writing on my laptop. I worked through the first 2 chapters, and I just got locked in. I'm like, oh, man, this is great.
Started flowing.
And so I got myself a schedule 3 times a week, you know.
it's almost like save up for a down payment.
Right. It's literally the same thing. And got herself a schedule, you know, Friday, Saturday, maybe Sunday, you know, 2-3 days out the weekend, once or twice during the week, you know. And so
So you treat it like a job.
yeah, I did. And about 10 o'clock, when everybody's asleep or something like that, you know, everybody's down, my mind is out, work is kind of out of my mind, open up the laptop, start writing. You know, I was writing till like 1, 2 in the morning. I mean, 2 or 3 times a week. And then on Friday night, heck, I'll be up to, you know, 4 or 5 in the morning. And do it on a Saturday. And the hard people would ask me, I'm like, you just got to be consistent. That's any life skill.
Yep.
And I was consistent, and I just started doing the research and started even diving deeper. And then that's when I really started realizing how bad America's housing shortage was. And I'm like, oh my God, this is really bad. And I began to tell people, I'm like, man, prices are going to continue to go up. And so I began to do some really, and everything is out there online if you really want to research it. And I just began to look at the information that was available. And all this is public. And I'm like, okay, we got to talk about the housing shortage. And I began to talk about the demographics in the book about where Latinos stand on home ownership, where Asians stand on home ownership, LGBTQ, where they stand on home ownership, where Blacks stand on home ownership, where seniors stand on home ownership. I began to hit almost every demographic to understand where they are in the home ownership space and where we are missing in the home ownership space. And so I've been to do a deep dive on that and put it together, and it was published in March of 2024. But it was like
That's a quick turnaround.
Yeah. I got locked in. And what I tell people is, too, when you're in the middle of that, your brain is kind of wired to not turn off. You're always thinking like, okay, can I add this? Can I add that? I saw something on TV. I saw this on a podcast. I saw this somewhere, and you just start researching that stuff. And so that's why you have to be consistent, because your mind is locked into that book mode of doing research and things like that. And so I was adding stuff at the last minute, like, oh man, I can add this and add that. And I was so glad I did that, because if I would have took like a week or two break, that information kind of, your brain is wired to something like it's kind of shut off, and I didn't want to shut my mind off. So I just began to do a lot of research and deep dive, and just put it in paper. And he published it, and I was very, very happy. I emptied everything I knew in this book. Like maybe one or two things I kept out, but everything about prices and everything, I emptied out everything I knew in this book. And that was one thing I was proud of.
So why should someone buy the book?
Well, you should buy it because if you're a current homeowner, you should buy it. I always tell people, you got to stay mortgage ready. Once you buy a house, you got to make your mortgage payments, right? Unless you're going to not make your mortgage payments, or if you want to buy another house, right? You have other ambitions. So I bought it for first time and current, and to understand there are a lot of things in our country that we can fix. The politics is getting away. There were like 5 to 6 bills in Congress that can fix our housing problems, but they're not going to get a vote because for some reason or another,
They latched onto something else.
yeah, they latch on to something else. Our tax code needs to be fixed for housing. So it's a lot of things we can do, and I just begin to do a deep dive on that. And so it's not just, if it's not, say, it's not my situation, but if you're a parent, you're going to have kids who are going to be buying houses, going to college. They want to buy a house, just like you were to buy your house when you're in your 20s. People don't know the average first-time home buyer is 38 years old right now. Think about that. The average first-time home buyer is 38. That's unsustainable.
Because there's a lot below and a lot above.
Right. The average buyer was 54. Who wants to take out a mortgage at 54?
Yeah.
I mean, that bad.
Right, 30 years. So we have to do this for future generations to understand that this is a housing problem we have, and we have to be able to educate our kids, because we want our kids to achieve the American dream of home ownership. So that's why I think people should buy it.
Nice. And so, first of all, where can they buy it?
They can buy it on Amazon. That's the only place you can buy it, and Barnes & Nobles.
All right. And on Amazon, I can say I went on, I looked, I put in Otis Gatlin, your name.
Yes.
Found the book.
Yes.
Easy.
You can. Yes, you can put in the mortgage manual on Amazon. It'd probably be easier because it's only like one name. Mortgage manual on Amazon or in Barnes & Nobles. They'll get it to you on 2 days on Prime.
That's awesome. Yeah.
So
now, having been a published book author, would you write another book?
Absolutely. I got an idea for another book concerning real estate.
That's where you'd want to stay, though.
I got I got a whole list. I would love a children's book on
How about a
financial
romance
literacy.
novel?
No.
This would be a part of it.
I got a financial literacy idea. I got a relationship idea. I got a marriage parenting idea. And I wrote all the titles down. It's just, do you want to dedicate the time and resources to do it? But I got another real estate book idea. Once you start doing this, you like, man, I can do this. I
You
can
caught
do
the
that.
bug, it sounds like.
Yes, very much.
Not the COVID book.
Yeah.
Not the COVID book. Yeah, good book.
Okay. Yeah. So yeah, it's a lot, and people, and we just people don't read nowadays. That's the people get more
information on Audible.
No, you can't get on Audible yet.
When's Otis's voice gonna come?
I would love to
book
do that. I got my
record it?
publisher was willing to do that, but it was going to cost a little bit more money. So I was like, all right, let me.
You can record it in the
Record
studio.
yourself here.
Oh yeah, you know what?
100%.
I can do that.
Oh yeah, one of the other ones. Yeah,
There's
for sure.
Doing like all of it.
Okay, that's a
See that?
goal.
We're gonna take it to the next level. Otis.
Absolutely.
We want some royalties.
But yeah, it's a labor of love, and
Honestly, I think that would be a great use of your time, though, because a lot of times I don't have time to sit down and read
Yeah.
a book, but when I'm traveling, I will do it.
On the car. I listen to podcasts in the car. Down to the dishes. Get to sleep.
yeah, that's a good thought.
But let's jump in a little bit to your life as a dad.
Okay.
What do you find to be the biggest challenge for you as a father?
I think it is adjusting to where kids are in their lifetime, in their life stage. I'm a different dad when I might get my daughters for 5. Now
Your
they're-
parenting has to be
my
different.
parent is different. Make sure I cannot parent in the bad way my parents parented me. My parent be like, sit down and shut up. I was more of a curious child. I was like, well, why does this? What is this? What does that mean? Why we can't go there? What do you mean we got to pay a bill? You mean you can't go to McDonald's because you got food at home? So it's just adjusting to where they are in their life, getting them prepared for real life. And that's kind of the challenge, because my kids didn't grow up like a kid. I grew up pretty much not poor, but poor. We struggled financially. My kids don't know nothing about that, the way I struggle financially. And getting them to understand we don't, every child didn't go on vacation like we do,
Right. So how do you teach them those lessons? You just talk about it, or?
Well, you try to let them know that there's life outside of your bedroom, right? You got family who don't share this, you don't have the same things that you have. And you got to teach them that, hey, it wasn't always like this. When you all were kids, me and mommy struggled, When your mom wasn't working and we were just a one-income household, we struggled. We had what we needed. And so adjusting to those things, and now it's a little bit more. When I go to a restaurant, there's no kids menu anymore. There's a real menu. So I go to Portillo's, it's like $80. It used to be $40 to $50. So adjusting to how they are different than when they were kids. I give them a little French fries at the time. I can get a whole meal. Now they want their own fries, their own burger. They want their own thing.
Two boys.
Right.
Yeah.
So I know how I ate when I was a kid. So just adjusting to where they are in their life. I think
We're
that's
big humans, so.
that's the hardest thing, adjusting to where they are, stuff like that.
What about balancing like being productive at home versus being productive at work?
It's good.
you
because
work from
I
home.
work from home. So the good news is I work
Do
late.
you like it?
I do. I like being in the office sometimes, but at this point in my life, I've been at home working for 5 years. So I do like it, adjust it. I like to
You
work.
got your flow.
I got my flow. I can go upstairs, make a smoothie, make a sandwich, make a bagel, and I ain't got to worry about, hey, where did Otis go? I ain't got to worry about all that stuff. So I do like working from home. It benefits because they are used to me being at home in their prime kid years.
Yeah.
And so that's the benefit. My wife is good with me working late, because sometimes I work weekends when we get busy, and we're busy now. And
But you're working from home.
But I'm working from home.
You're working, but you're still around.
I'm still there. If they had a question about homework, I can still stop and ask them, hey, what you need help with? How was school? They have someone to come home to. And I think that's a good point of stability for them, because every child doesn't have that, and I hope I can continue to do that. But yeah, I think that's kind of helps me keeping them out working from home, and them being older and seeing me seeing them grow up and stuff.
So at 11 and 15,
Yeah.
they see dad working from home.
Yeah.
Do they have any idea what you actually do?
No, because they just see a queue with a whole bunch of names on it. I got 5, 10, 15 names in my queue, and 3 of them are closing. 1 is ready for initial approval. So they don't know exactly. They just see a whole bunch of numbers, and they be like, oh, that looks complicated. I don't know. All these bank statements, all these papers, and all these retirement statements.
They know that you wrote a book.
Math is too hard.
Yeah, they do know I wrote a book.
Do they have any desire to read the book?
Not yet. Not yet.
Someday.
Make 'em read
Someday.
your book report.
Yeah, I told them.
And have it like gotta like put it like an AI filter.
Yeah, I told them.
That's right. That's right.
I told them, I said, y'all not ready to read. This is a kind of a grown-up book. And I told my oldest, I said, hey, you need to know, because I got my oldest taking a financial literacy class for summer school.
Great.
So she's going to be doing that. And so now that I'm kind of building upon, okay, she learns this financial literacy thing, let's kind of go into the whole mortgage, finances, checking, savings, saving your money type thing. So
Where is that through?
Huh?
Where's that through? The financial literacy course.
Through the local school district, Bolingbrook. They have a summer school.
I got that in Plainfield 202.
Yeah, it's a summer school. It's extra
that's
credit.
fantastic. I think that's a great idea.
It's a personal finance class. And having her take it in summer school, she'll get extra credit for it. And so she gets a double, it's 3 weeks, half a day, not too long.
All right.
So that's
Nice.
kind of
That sounds like a good investment time.
Yeah, so they need to do something. They're not going to be sitting around the house watching TV all day.
Do Mr. Beast.
Yeah. They're not going to do that.
Is that gonna be the next Mr. Beast or Mrs. Beast?
I would love them to be one of those guys, but the likelihood of that happening, I always tell them, is very, very small, 0.1%. So we're going to play the percentages.
Yeah.
And that's what I work in, the percentages.
Yeah.
So that's what I do. So, but yeah, that's how I keep the balance of it.
That'll be a bigger risk to reward on the YouTube stars.
Yeah, and my daughter's been asking me to be on YouTube for like 2-3 years, and I'm like, the internet's a nice, horrible place. You just can't be on YouTube nowadays. You just can't put yourself out there. So let's make sure you're ready. Let's make sure you're mature. Let's make sure that you got your grades the way we need to have them before we even go out there and do that. So she's been asking for like 3-4 years. I'm like, we just got to wait. My wife is like, no. But I don't want
to have our own channel and start producing
all that
content.
stuff. Yeah. I'm like, just let's wait. Let's put a pause on that. Let's not be in a hurry to be on the internet.
All you're doing is delaying your retirement.
You're right.
She's going to retire you.
Look, I wish she could.
Be her producer.
Yeah, you need to do something. Bring some money in. Like my mom said, get a job. Much they eat. So yeah.
Nice.
All right, so let's wrap it up with
Sure.
We got my little snippet that happens every episode. Quill's Corner. It's our health tip of the week. Going along with working from home, desk warriors. I like to educate my patients on exercise snacking. So just like you go upstairs for your bagel or a little bite to eat, exercise snacking every time we get up. Do a couple stretches, several exercises. Get some water. Make sure you get enough electrolytes so that you're combating all the time that you're sitting at the desk. Your hip flexors tend to get short. Your neck gets all jacked up. So if you do some neck rolls and some stretches, helps keep away all the neck pain and the back pain, and then stop walking around like a brick of Legos.
Oh yeah,
for sure.
Working from home, there's a danger in that too. I never will forget when my kids were big into Legos. My daughter had, actually it was Barbies, and she had a Barbie that had a little crown, a little tiara, and it was the little thing was about that big, and it had a point on it. Sure as can be. Middle of the night, I get up to go to the bathroom, I step on that thing. Oh, it hurt. So painful.
The worst feeling
I don't
in the
miss
world.
that part of parenting at all.
No.
We're in the thick of those things.
Yeah. So let's talk about some key takeaways here
Yes.
from you, Otis. Sounds like financial education kind of starts early on.
Yeah.
When you want to get a mortgage, you need to have already done the work,
Yeah.
right?
Yeah. Very much. It's a process. I mean, you don't just walk in, people understand it's a 30-year commitment. You know what can happen in 30 years?
A lot of stuff.
A lot of things can happen. Babies,
Yeah.
So
you want to plan in advance. You see that house in the corner, and all of a sudden you want to buy it. Hopefully, you've done the work before you got to that point. So
Yes.
it's a little easier to
Absolutely.
actually get a mortgage.
Absolutely.
And on the book end of things, what's your tip for writing a book?
You have to be consistent. That is the number one thing. And you're going to have to put some things away for about 5 to 6 months. If you really want to write it, you got to just kind of buckle down and do it. Get yourself on a schedule. Don't overwhelm yourself. We all parents, but you're going to have to, I did it around fall when it's going to be cold outside. So I know a lot of gatherings and things like that. So you got to be consistent, number one. You got to be, put some things away, other extracurricular activities, and be able to write it, because, you'll get better the longer you write it, and that's what I say. That's the biggest thing. Like, how do you do it? You kind of, limit the distractions, limit where you're going to be going out, stuff like that. And it's timing is everything. I wouldn't write a book in the summertime. There's too much going on, right? So I say, timing is around once the kids go back to school, September, October, and pretty much people are in for the holidays, do it that time.
Yeah, close seasons for mortgages too.
Yeah. Typically, our slow season is October to February, because once people get their tax refunds, that's when they start spending it. Because people want to buy a house when the summertime hits, so the kids can be out of school, so they can register them for the next school year in the next school district. So October to typically February. January and December is really slow, but for the most part, people are still buying, but not as much, especially.
So we all move quick. We did it in January.
Yeah.
Yeah, that's crazy. I mean, it's quick in January because you don't have a lot of backlog, so that's kind of the good news. Yeah.
Well, thank you, Otis. That is, show them the book one more time, of course.
The Mortgage Manual on Amazon. Go get it, folks. I need it.
Delivered to your door. Help,
Or Barnes & Noble, yes. Please retire me.
Help Otis pay for college for the kids.
Please.
Folks, that is it for episode 6 of Dad's Deals and Dumbbells. Thank you to my friend Otis Gatlin for making time for us, keeping it real, and giving us the mortgage tips. And
If you laughed, learned something, or just appreciated hearing from a dad who's out there doing the work, do us a solid, subscribe, leave a review, share us with a fellow dad that just can't stop talking, and get our story out.
if you got a wild story, mortgage horror, tale, perhaps. You want to write your own book, feel free to hit us up on Instagram, Facebook, email us, dadsdealsanddumbbells@gmail.com. It is all up there and ready to go. It might wind up on a future episode.
Definitely. Until next time, lift something heavy, read a chapter, preferably in that book there. Tuck your kids in and check your credit scores.